Hello and welcome. It's Andrew Peters. This is a re-recording of the recording I did earlier this morning, at which time I forgot to switch on the recording button. And so for my sins, I'm now having to do this one again. Let's see how we go. So since this is a financial product webinar, we need to show our risk warning and disclaimer that Forex trading is a risky business and you should take full responsibility for your actions. If you need to read any more, please pause the video to check. I always like to remind people of how risky things can be when in January of this year, the Swiss Central Bank decided to stop pegging the rates for the Swissy, and it immediately plummeted 3,000 pips. And even if you had a stop loss at 30 pips, if you're on the wrong side of the trade, that stop loss would not have been triggered well until you lost a lot of money. And remember that about 4 brokers went out of business when this happened, including the well-known El Pari. So trading is risky and we need to act responsibly in what we do. And that means trading only with money that you can afford to lose if you really have to. Obviously you don't want to, but so don't trade with your life savings. Start with small amounts. As you start making profits, withdraw some of those profits until finally all that you're trading is with your profits and all your initial capital is safely back in your hands under the mattress or in the bank of your choice. And then if you trade that way, you'll much more likely feel happier and deal with trading a lot easier than you otherwise would. These sort of scary scenarios do happen, they're real. I've had a couple of them, so please don't treat that lightly. But I should also point out that as someone told me that last week I did not introduce myself, and that was largely because I go to quite a few webinars and I don't like it when the presenter spends 20 minutes talking about his or her life experiences. But I should say something, and that something is that I've been trading for about 6 years now. Started trading manually, found that I didn't have the temperament and the patience to wait for all the setups that you need to look for. Also the fact that as I live in Australia, a lot of action happens during the London session or the UK or the New York session when I'm fast asleep. There's no way I can be ready for the trade setups. And so that's when I switched to robots or expert advisors and tried about 100 of them. And most of them were a disaster, but there were some good ones, and I did make some money with a couple of them. But what I disliked about robots is that unless the designer told me how it worked, I was essentially working with a black box and just hoping for the best. And so what I've come around to over the last couple of years is that I want to be able to trade manually. I want to be able to understand trade setups, indicators, how the market moves, volatility, aware of fundamentals, but I don't want to have to, and so I want to develop my own strategies so I know what it is that I'm trading, how I'm trading, but I don't want to have to execute those strategies manually. I want a robot to do that because they're mindless beings and they'll do exactly as they're told. Whereas if I try to trade, I often jump in too quickly, get too frustrated, or get out too quickly. So I've combined designing strategies myself on the chart on the weekends or when I have some spare time, then transfer those settings to the Autotrader, which I'll be talking a bit about more, using the Autotrader and the strategy tester on the MT4 platforms to backtest and then to optimize those strategies. And once I'm happy with that, then let it trade forward on demo for a couple of weeks to make sure I've got the settings correct and that it still works going forward, because backtesting obviously is done on past markets and we only trade in the markets that are happening ahead of time or as we progress. Once I've done that, I can then happily have my strategy executed, if necessary, 24/5, or if I've selected certain periods of the day when this is more profitable, as shown by my back testing, then it'll trade only those during those periods. So I can relax, I can go out to dinner, I can play my tennis, I can practice my guitar. I don't need to worry because the robot is doing the work that I've told it to do. And so that to me is the way that I feel comfortable about trading. I know what I'm doing, I know what my robot is doing because I've told it to. And when that strategy fails, I just make a new strategy. And of course, I usually have up to 10 strategies running because with the Autotrader, I can open as many charts as I want to. I can place the Autotrader on as many charts as I want to, and I can set each one with a different set file to run a different strategy. So that's me, a if you like, a semi-automated trader. And that then is the concept that I have for this webinar series. And that is, let me use my little highlighting spotlight pen. So we take a trading strategy. Now that could be, as we did last week, by going to the web and finding what someone is suggesting we should do, or reading a book and finding a strategy, or having something that someone suggests. We need to understand the logic of it. And then we enter those settings. Now, the Autotrader can only deal with moving averages in all sorts of manner, with MACD and with RSI, and with moving averages of RSI. So I'm limited to those key indicators, but they're the ones, the true and tried indicators that virtually everyone uses. And things like moving averages form the basis of a lot of the other indicators that we see. So it still gives me heaps of opportunities, as we will find out during this series. So having taken a strategy, understood it, entered the settings on the Autotrader, we then test it with Strategy Tester. We analyze that result using the Quant EA Analyzer, which I'll be showing you, and we optimize further, usually over 2 to 3 years of back testing, because in 2 or 3 years there's quite a bit of variation in the market, and if you can devise a strategy that operates through the varying market conditions, then you can know it's a fairly robust strategy, and the likelihood that as you go forward, as the market changes a little bit, you can be fairly confident that the strategy will still get you through and end you up with a profit. Whereas if you do as many people do and only back test something for 3 months and fine tune it to generate you 50% profit per month or whatever people would like you to believe, and then you put that forward, you'll find that in the next few months the market conditions change subtly, and the strategy that you had optimized over the previous 3 months will turn out to be a disaster. So some people like to backtest and optimize over 8 years. That's a horrendous effort, requires a lot of computing power, and I certainly don't do that. I've chosen from 2012 to be my key area, but going forward in these webinars, I might do it for shorter times in order to fit within the 1-hour sessions that we do have. But once we've done that, we then take that strategy and we trade it manually because we've understood the logic of it, and we've got the settings for the moving averages and the RSI or the MACD, whatever. And so you can trade it whenever you're awake. If it's a daily one, that's easy enough because you only need to look once a day, the close of a candle. But obviously, if you try to trade it on the 1-hour time frame, you'd need to be at your computer for a certain period of time in order to see when those setups occur. But that's still possible. But if you have the Autotrader, and obviously then you can set those settings into the Autotrader, and your trading will be done on autopilot. Now let's go back to my normal long pointer. And what did we do last week? Well, last week we took a strategy from Investopedia, and let's see if I can bring that up. And this is the article here. So it's an article written in September 2010. Let me get my pointer back. I don't know this person. I don't really know much about the site, but it talked about 4 types of indicators that all FX traders must know. And one of them is a trend following tool, which says the moving average excuse me, crossover. I can't on this one. So can I scroll down? No, I can't. So, but that's just one example, but there are lots that you'll find on the web or in textbooks that'll enable you to find some good ideas. If I can get rid of the arrow, here we go. So let's go back to the PowerPoint. So we took a strategy, in this case from Investopedia. Now there is, I can't, let me just get myself to a pointer if I can. Okay, and now I can get my pointer, laser pointer. Okay, and we can do better. So we took a strategy from Investopedia. It had a moving average crossover of 50, a simple moving average of 50 over the 200 SMA, and the normal MACD, the 12.26.9, as a confirmation, and then we entered the trade on that basis. So what we did was we entered these settings into our Autotrader, and we added a nominal take profit and stop loss, and we back tested it over 6 months with Strategy Tester, found that it worked. We then optimized the MACD settings and found we could get it to work better. We then back tested it from 2012 and we found it failed. And that's the big wake-up call. You can get a strategy that works well in the last 6 months, but if you test over a longer period, it suddenly becomes a bit of a disaster. So we analyzed the backtest results, and what we found was that the London session, roughly the London session, isn't profitable. So if we only trade during that session, whether we auto trade or whether we trade manually during that session, if you are awake at the time, you can be profitable with this very simple strategy. Let me just see if I can bring that up. And so this was the trend confirmation that we dealt with. And as you can see, I have a a 50-period moving average in red, a 200 moving average in blue. I have my MACD, the normal MACD, which is the red dot, 12, 26, and 9. And what we found is that the entry condition for a buy is if when the red is above the blue and MACD histogram is above the 0 line, which happened at this point here. So we would enter a buy here and we would follow the trade up, and we would have to have some take profit level. I found a take profit level by doing optimization runs on the Autotrader. If you're trading manually, what you would probably do in this case is you would look at your previous low, which is around about here, and you would set your stop loss a little bit below that, which as we can see was just as well, otherwise you would have been spiked out quite early on. But say that we'd set it about here, so we entered at this point here, and we would have gone through this horrible spike. So now if you did that in the beginning of the day, you might still be around, you may not see that, hopefully, and you would have set your take profit at least twice this distance. We talk about a 2:1 reward to risk ratio, so your reward should be at least 2 times the risk that you're taking, and that would have taken you out somewhere around, you would have got yourself out somewhere around here. And we can see the same for a sell trade here. The red has crossed the blue, the fast has crossed slow. The MACD has confirmed because the histogram is below, and we would be now safe to enter a sell. And as we can see, because we had a nice gap, this is a particular weekend gap. Again, we would have made some money. In this case, we would have, if you're trading manually, you would be wondering what sort of stop loss to set for yourself. If you went to your nearest high, it would be way up here, and that's a stop loss on my 4-digit broker of 230, which is, I suggest, bigger than most people. So you might have put your stop loss at about here, about 122. and then you should have it take profit at 240, which is down here, but maybe you would take out half your profit if you woke up after the weekend and found it here. You'd get yourself out at about 70 pips profit. While I'm on this particular area here, and we're looking at what we call a gap, which happens, it should be from here. So the market closed on Friday evening and opening in on Monday morning, and we had a huge gap. Now, what often happens in Forex markets, in equity markets, is that this gap tends to get filled. And so there's particular strategies where if you've come across, wake up on Monday morning and see that, and you're up around here somewhere, it's often not a bad idea to do a buy trade in this case, put your stop somewhere below and wait and put your profit at the close of that gap, because for some odd reason traders like to fill any gaps that are left, and in this case that worked, and of course then the price went back down again. But that is an aside. Let's go back to our PowerPoint. So I've shown you how we do the strategy, and now what I wanted to show you was this one. So we ran that strategy, and we ran it back for 2012, and we found it lost badly. And then there's a thing called the Quant Analyzer, which is a product that used to be free, and there's still a version that is free. And this link will be in your handout that I'll be emailing to you. But it allows you to take your strategy tester report and analyze it in more detail. So instead of setting a whole row of numbers, we can now see that this particular strategy really lost badly in 2012 and 2013, and then became profitable in 2014 and 2015. We also could see that by a weekday, that Monday, Tuesday, and Wednesday were losing days, but Thursday and Friday were winning days. We had about equal number of longs and shorts. Over a year, half the month were big losses. And then this is the interesting one where I have the rectangular box. And this shows that in the period which is roughly a little bit into the London session and perhaps a little bit into New York, we have a period where every hour except for one is positive. And so this would indicate that this strategy is worthwhile doing during essentially the London session. In my case, I'm working on a GMT +2 broker, and with that broker, the hours are 1300 to 1800. So that means that should be 1100 to 13 to 1900. So that would make it 11 to 1700 on GMT time. So if we did that, if we only traded during that period, or if we set the Autotrader to only trade during that period, quite a different picture. We wouldn't have lost anything in 2012, lost a little bit in 2013, did really well in 2014, and are doing well in 2015. Remember, we're only not even halfway through the year yet. And we can see that every day except Friday is profitable, and that those hours certainly are, except for 1 hour, which is negative. And remember, these are now over 3.5 years, so these are the hours over a 3.5 year, the 200 odd trading days a year for 3.5 years. So that's quite a consistent pattern. And so that's how we finished up last week. And excuse me. And what we had though is and again, let me briefly use the spotlight, so that although we made a bit of money in 2012, we lost a bit again in 2013, and we didn't really become consistently profitable until the early of or late 2013. And there's a bit of a downturn at the moment, early towards the end of June. So from 2014, this strategy really works well. And to me, I feel confident that going forward with that on that basis. But what I might do on the side over a weekend is see if I get this strategy to work better during that period. So I would go back and re-optimize only using backtest data from 2012 and 2013 and see what settings would make this period profitable, so that if we were going forward into end of 15 and on to 16 and this thing started turning down badly, I might say, well, looks like we're going back to the conditions in 2012, 2013, but now I have a strategy that is profitable in that period, and I'll then apply it when this one starts turning down too much. So get yourself a long-term picture. Obviously work with a more recent past, but be prepared to re-optimize if you need to. Okay, what I did promise also was that we would look at seeing whether we could make this one even more profitable. And to do that, I added some scale-ins to our trade. So let me show you what I mean with scale-ins. And let's go back here. So scale-in is simply that if we'd taken a trade at this point here, we could also say, well, if this strategy goes well, I want to add another trade at this point, and I would, in this case, that's about a 26 pip distance. And if it goes that far, I might want to add another trade. So you would set up these as pending orders using your new order stuff. And if your trade did go the way you expected to, you would add a second trade here and a third trade here and so on. What you can do with the Autotrader is to automate this activity. And after some optimizing, I found out that if I entered a trade at about 5 pips into profit, and then at 10 pips, and I think I added another one at 15, and I added another one at 20. I haven't quite got this right, but you can see what I'm getting at. So we would have entered here. I would have triggered these extra 2. Unfortunately, then I would have gone down, and I would be in quite a losing position, temporary drawdown at this stage. But in this particular instance, I was lucky. We reversed. It would have triggered these next 2. And now at this point here, I not only have my initial trade running, I've got a second one, third one, a fourth one, a fifth one, and they're all into profit. And that's when we can do what I call basket management. Now, so there's 2 options. And if you're manually trading, you might want to set a take profit and a stop loss for each of these individual trades. And you might say, well, this is my last one. I can't expect the trade to go much higher. I'll give this a 50 pip take profit and a 50 pip stop loss and so on. And you would win or lose on that basis. But with an Autotrader, or manually if you spare to do a bit of work, we can manage all of these trades that might happen like that as a basket. And let's give that a go. So let's call up our strategy tester, which is the little symbol up, I'm in towards the top left-hand corner. And I have loaded my expert advisor. I'm on and I should have say this, I'm doing all of this work on the Euro USD dollar on the 1 hour time frame. There are lots of other pairs and time frames we can try, but for demonstration purposes, this is the one that I'm going to be doing all my presentations on. We're doing every tick. We're going to test from January 2014 until the 1st of July 2015. And I now have my expert, and I won't be setting about what I'm loading is. What I have here is I did some testing, and what I ended up with was doing the scale-ins and doing a basket management and setting lot size to 1 lot, which is quite significant, but I'll tell you why in a minute. So let's load that. And just for those people who have the Autotrader, I just want to show you where we go in that. And the first point is in the scale-in section, where I'm going to add a 1 lot size scale-in, and I'm going to be entering it at 5 pips in profit, 10 pips in profit, 15 pips in profit, and 20 pips in profit. We're going to add an extra trade. I'm not going to set any take profit or stop loss on that. And in this case, my initial trade is also 1 lot, and I'm not setting any take profits or stop losses because I want to manage it as a basket, which is this line here. And hopefully you've got your glasses on and you can see what I'm doing. But I've set manage of a basket to true, and I'm going to close it at take profit in pips. And what I've selected after optimization, when the trades together, so that if a maximum of 5 trades could be on together, when collectively they've reached 200 pips in profit, I'm going to close and take my profit. Same way, if they collectively go down by 100 pips, I'm going to take my stop loss. I'm going to break even when I'm collectively at 40 pips in profit. I'm going to lock in 20 pips. And I'm going to start trailing when I'm 100 pips in profit, and I'm going to trail it by 50 pips as a basket. So that means to get 200 pips on a single trade, you need to move a long way. But if you've got 5 trades going and starting roughly about within 10 or 20 pips, the trade only needs to move up, maybe only even 100 or 80 pips, and you will have collected your 200 pips profit. Obviously, you could also get stopped out quicker, but as you can see, my normal stop loss was about 100 anyway, so I'm not really losing anything by going in this way. So let's set that to go, and let's click Start, and let's see how that strategy works. I hit my graph. Now we can see on the strategy tester, the green line is the equity, and because we have several trades running, obviously that will equity will be higher, and the balance won't change until the trades are closed, and so we'll keep getting these nice little loops, if you like, as we go forward. Now while that's going, let me go back, and I think I have the result for that. This was my first, and I mentioned to you, I said I'm trading 1 lot, which is a hefty size, even though it was a $10,000 account. I started off with a much lower lot size, and when I did that testing, I found that I only had a drawdown of 2.6% over 18 months period. Now that's very low, and so that's when I said, if that's the case, I can increase my lot size because I'm prepared to tolerate about a 10 or 20% drawdown. And so that's when I went to do the much larger lot size, and it's a bit hard for you to see probably, but as we'll show, I made $11,000 on a $10,000 starting account. We made $11,800 in profit, a profit factor of 5.3, and the maximal relative drawdown was still only 10.5%. So that's pretty good. That was only though for 18 months, and what I'm showing you here, this was trading from 2014. That same test going back to 2012, we still made $9,000 profit, but our profit factor was 1.5, so still positive, but not so good. But the big concern is that the drawdown was 77%. Now, you may be prepared to wear such a drawdown, but I find that rather tough going, and so I think I would probably not go forward at this lot size. I'm prepared to tolerate maybe 50% drawdown, but 77 is rather large. But the positive thing about it is that even though we had such a large drawdown, so we went from 10,000 at some stage to about 3,000, or even more, 2,200, we're still able to finish the 3.5 years with $9,000 in profit. So it's still a pretty robust strategy by having the basket management. Let's see how we've gone. And I think we have almost finished. And as you can see, we've had a nice smooth equity curve. You couldn't really want for much better. We're up at the 22,000 in total in balance. And so this one should finish pretty soon. As you can see, we're almost done. And there goes my little chirpy. So that's finished. And here's the report. $11,800 profit, 5.29, and the maximum drawdown was only 10%. So that's been quite a good. So remember now, if I close that out, we started off with a very simple strategy, which we picked up from the web, trend confirmation strategy. Based on that, we've optimized it a little bit, and then we've added some scale-in trades. Now, when you're trading manually, it's hard to know whether this is always going to work. And obviously, you can go back and test it all out for you visually. But this is where I think the Autotrader comes in handy. Even if you don't want to trade on autopilot, having the Autotrader to test out what settings you should use and whether these things are worthwhile doing is still of great benefit, because you can now do 2 or 3 years of back testing and say, yep, that sort of scale-in would work okay with this strategy. Okay, and I've lost time of where I'm at, but let's keep going for a little bit longer. What I wanted to just confirm now, so we're doing trade entries with the Autotrader, but you can do it manually. We've done the trend confirmation strategy, and I also showed you very briefly last week the pullback, and I'd like to demonstrate that next. For that, we need to go back to our charts, and if I've got it correct, we have our pullback set up. Now, just to orient yourself. So again, this is going back to the Investopedia article where they're suggesting that a second indicator that's worthwhile knowing is RSI. So let's just make that clear what we're doing here. So it's RSI, and it's period 3, and I'm using the levels of 80 and 20. Okay, so on this chart we have our 200 SMA. That's a very common moving average that people use. If you're above the 200, you only look for buys. If you're below the 200, you only look for sells. It's quite a good generic one, and because it's used so much, I guess that's why the markets tend to behave according to it, because if everyone uses something, then the market's going to be forced into that mode. I've now added another moving average, which is our 5, which I use for the Autotrader, but before that I want to show you the manual setups. So what the Investopedia article pointed out is that some people like to enter a trade when the trend begins. So at this point, prices come from below 200 SMA to above, and if we have the conditions right, we would enter a trade on that movement above the 200, enter a buy trade, and we would enter at this point here. But there are other people who like to have some confirmation that, or like to enter on a pullback. And a pullback is when something goes one way, pulls back, and then keeps going in the original way. And the question then becomes, how do we decide when the pullback is finished? Of course, a pullback could go all the way and properly reversed. And that's where they're suggesting to use RSI, but RSI with a period of 3. Normally when you enter add an RSI, it'll be, the default is 14, and we've got to get used to looking at different periods for RSI to be useful. So for this case, we use an RSI period 3, We also set the levels of 80 and 20, and if you haven't done that before, when you right-click on RSI and you hit RSI Properties, that's your parameter where you can change it from 3 to 14. And this is the levels, and you can, if you wanted to add another level, say if you wanted to see the 50, you add that, and you hit OK, and you now also have the 50 line on. I don't want that in this case, so let's see if I can get myself back out of there. There we go. And levels, and I want to delete that, so we'd hit delete, hit OK, and we now have it. So what the author is saying is that when you're in an uptrend, but RSI 3 drops below 20, then that signifies that it's oversold and the price should start going up. And I say should because nothing in life is always certain. But as you see in this particular chart sample, this works quite nicely. So we're in an uptrend. We've seen RSI reverse back below 20. We would now enter a buy at this point, and we would have entered on the pullback. It's not quite the bottom, but it's pretty close. The next time there's another pullback, RSI drops again, so we could enter another trade here. So you could keep your first one going, or you could take your profit and then enter another one and see what happens there. We have another case here, but in this particular case, it doesn't look like it's going to work for us because we would enter at this point here, and instead of going up, it only goes up a fraction, so we might still get it, but then she plunges down. But here is another one. We go back below, RSI 3 goes back below 20, and so we would enter another buy trade at this point, which would work quite well, and another one even here. And I think that would certainly could get some pips out of there. So that's the basis of the pullback with RSI. And if you have the Autotrader, we can set that up in the Autotrader. But I'll just, if you, I'll say it briefly, but I'll provide the set files for the Autotrader people. In this case, what we're looking at here, to do it on the Autotrader, because we have to tell the dumb robot as to when we want to take a trade, and it's a little bit hard to see how we could specify this. And so I do that on the reverse setting, and which is probably not smart for me to go into at this stage, but what it essentially means is that we would tell the because what the point I'm getting at is that we're actually heading downwards at this point, and normally with the Autotrader, a buy signal is given when moving average 1 moves above average 2, but it's pointing in the right direction. So if you want to take a trade when the moving average is pointing down, then we need to use the setting that we have on the Autotrader, which I can bring up here. And if we look at this line in the Autotrader, I can set this to true. And then whenever a buy signal is signaled, it'll actually take a sell and vice versa. And that way we can set our strategy. We can set the Autotrader to trade on this particular manner. This stage, we don't have many Autotrader people with us, so I'm not going to go into that any further because that does become a little bit confusing. So that's the pullback with RSI. We can also do that with MACD, and that's something, again, that is slightly different. And here I am using an inverse MACD and an MA2 position, and that's my particular pullback with using the MACD. I'm going to leave that for now and move on to our next one, which I think would make a little bit more sense, especially if you're trading manually. And because of time, I'm going to just this week do the bearish bullish divergence. I'll take that back. I'll do the trend line break because I think that's a simpler one to do, and we'll show you that, and we'll show you how you can use a smooth MA as a trend line as well to enable you to run this strategy on the Autotrader as well as trading it manually. Okay, let me delete it. So when we one of the ways of trading, if you're trading off the charts, is to use trend line breaks. And a trend line break is simply done. We take our trend line tool here, and now of course it's a bit unfair at this stage, but you could see that we have a nice trend line here where price moves up. Now we should remember that in real life it's probably something like that, and I'm saying it looks like it's holding, so I'll draw that trend line, and then as time progresses, when it breaks, I'll enter the trade, and you would enter the trade at this point here, often on a nice big bar, which is great. And as you can see, we've got about 160 pips of profit available there. Now, it's a very simple strategy, and when you're going the other way, after you've done through there, you might decide to do something like that. Don't need to be too precise because nothing in life is all that accurate. But if you've made some money here, you might get out when it breaks this trend line, and you might enter a buy, and you could go forward like that quite nicely. So you'd be entering it here, exiting it there. You made a nice profit, and in this case it looks a really nice way of doing it. Now, life's not always that easy, but that's how trend line breaks work. And what we often find, although I don't see it here now, but I do see it in this one here, that you'll often get a break. We then what we call retest the trend line, and then it goes. But here we've only had quite a small move, but still it's been sufficient to make some money. Now, it's useful when you do a trend line break to combine that with an RSI, which is what I've shown here. And so this is our trend line, and this is a trend line here. And the point I wanted to make is that although the Autotrader doesn't have a trend line capability, as I said, moving averages can be quite useful. In this case, I've optimized it to moving average period of 10, but I've got it smoothed, whereas normally a lot of people use, say, an exponential, and that looks very different. It hugs it far too much. But if we make it a smoothed MA, it starts to, in a lot of cases, it becomes a fair bit of a straight line and really looks a bit like a trend line. And so if we then add a second moving average, which in my case is a period 2, I can now say I want to enter a trade when the period 2 breaks my smoothed MA, which would have been here. But I want to play it safe, and I only want to add that when my RSI also confirms. So if I go back to here, I've now got my, so if we're trading manually, we would enter at this point here because price closes back above a trend line. I would enter a buy here and I would do quite nicely. If I'm auto trading, I'm relying on the 2 simple moving average breaking above my 10 smooth moving average. And if it's a buy, I want my RSI to be between the green levels. That's an RSI of 45 and an RSI of 70. So if I've come down this way and RSI is above here, I'm happy to enter a buy. That's my confirmation signal. When I'm doing in a sell, it's different. In other words, at this point here, the 2 MA did break down below the smoothed 10 MA, but my RS9 never went into the red zone, never went in between RSI 55 and 30 where I wanted. And so I would not have, the auto trader would not have entered this trade, which is just as well because we would have lost. But at this point, when the 2 moving average again breaks the 10 smooth moving average, about the same point as it broke the trend line, that case RSI is now between my 2 red lines. It's below 55. And so the auto trader would now enter the sell trade and we would make that money. So what I'm showing is you can trade manually using hard trend lines, or you could obviously use a smooth. But if you want to do the auto trader, we can mimic sort of trend lines by using a smooth. And so insert text. So that's a 10 smoothed moving average. And we normally call that, instead of simple, we call it SMA. So that's the blue one. And that's a 2 period moving average, simple. And that is RSI 20. Insert text. RSI period 20 and levels 30 to 55 and 70 to 45. And so with those 2 indicators again, so it's another strategy. That's why we keep saying that moving averages and RSI, you can do lots of things. And this just shows you how you can do a trend line break setup using the auto trader. So this way you can test this strategy. You can back test this strategy, optimize it, and then you can either trade it forward using the auto trader or trade it manually, but in the knowledge that you know that it's worked pretty well over the past X years. And the other particularly good thing is auto trader allows you to find what the optimum take profits are. If not, you need to judge what to go for. And often on a 1 hour chart, 100 pips profit is generally pretty good. I've found with the auto trader, let's have a look at it. Strategy tester, expert advisor, load, $Forex webinars, and what have I got? Trend line break with RSI. So I've set that. And as you can see, I found in my optimization, I can do a 4% risk. My optimum take profit was 480. Now that's only couple of trades went that far, but I've got an initial break even at 40 and locking in 30 pips. My initial stop loss is 80, and I'm trailing it at 100 pips by 100 pips. Could possibly make that a bit smaller, but those settings worked really well. And the other thing is I can trade it all day. So let's have a look at it going back from January 2014. And we'll see how well this particular strategy does work. I'd be interested to know how many of you do backtest regularly, and whether or not there's any interest for those who haven't ever backtested, whether you would like to see a webinar where we deal with how we set up our backtesting site, because backtesting, if you don't have the proper data and you don't do it properly, you can get very misleading results. So we could, in one webinar session, demonstrate how to set up your backtesting platform. As you can see, I'm disconnected from the web, and that's one of the good points. You should use an MT4 platform that's not connected, so that you don't get corrupted by poor broker data, but that you're relying on good data, which we get from Dukascopy. And there's an easy way to load that data, and there's also some bad ways of trying to load the data. And whatever you do, don't just open up your platform, hit strategy tester and do a test, because unless you've got good history data in there, those results will be totally meaningless. So this has run its way now. You can see we've made $19,000 in profit in the 18 months. Profit factor is almost 1.7. Our drawdown relative to the biggest drawdown is 20%, relative 10%. So that's pretty good for a very simple trend line break strategy. So obviously we could do this manually. As you can now see, you could also run it on autopilot with the Autotrader with these settings that I've developed. Okay, and I'm going to pretty well leave it there. We'll look at the bearish bullish divergence trend reversal strategy next week. So the first two we did, the trend continuation and then the on pullback. So these are trading with the trend and adding to positions. The second two are where we're looking for a reversal of a trend, and we do that with either with a bearish or bullish divergence, a divergence between price and RSI, or between price and MACD. And then we can do a trend line break, which is also a reversal. And what I've shown you today is that we can use a smoothed MA to mimic a trend line that we might otherwise draw on a manual chart. So the format again for our webinars, we'd like to take a strategy, and I'm hoping that you'll start sending me some ideas that you have that you like to test. We'll use the Autotrader to automate that strategy, and then strategy tester to test it. And then we'll use the EA analyzer, the quant analyzer, to look at that strategy report in a bit more detail. Let me show you what I mean. Once we've done this one, what I would now do is do a right click. I would save it as a report. And I'm not sure. I would give it a name. And I would save it. And I think I already have it here. But let's say that I don't. So I'd say Trendline 2014 with RSI. Misspelled it, but doesn't matter. We'll save it. And what I can then do, so it'll come up here, it'll show me all of that. And if I get my quant analyzer up and running, it'll take a while, then I'll come back to that. So we use that and we can analyze it further, and that can help us in our settings. Again, if you want to take a screenshot, If you're new to Forex, babypips.com is quite a good one. They've got a section, a series of lessons, just like elementary, high school, etc. Well worthwhile doing. This is the site for the strategy quant, which has now come up. And let me just finish. And if you want to buy the Autotrader, that's the link to go for. That way, Donna Forex benefits as well from any sales. And that's my contact address. The analyzer is this here. And if I load the report, and I should have, here we go. This is the one that I did. So total net profit of 19,000, a profit factor, long trades and short trades. I like to look at the trade analysis. And we can see 2014 was good. 2015 has been a real ripper. Tuesdays have been losing. Tuesday and Fridays have been losing days. A few periods not so good. You could obviously, this looks again like the London session. I mean, I haven't looked at this before, so we could set the Autotrader to only, or you could manually only trade in that period. And in the past year and a half, July, September, and October have been losing months. But for instance, if this is the period here, which is from 12 again to 19, and what we could do, let's have a quick look at that. So 12 to 19, go back here, I go to expert properties, I go to my timing, I'm in the trading sessions, I hit true, we said 12 to 19, so that should be fine, and let's see what happens when we do that. And we'll have a look at that in a minute. Let's just go back to here. The other good thing about this one is that we have this what if scenarios. So I can now do a, well, before we do that, let's just have a look at the equity chart. So it's a fairly steady one going up. We can add our drawdown in percentage. And so Spear was good, but you can see how we had a really good run in this year. We can check up all our settings here. We can do the whole list of trades if we want to analyze it. And we can do our overview in different ways. But we can also do a what if. And so what I'm doing here, let's only trade from 12 through to opening at 18, so closing at 19. But let's trade every day of the week. And if we did that, what does that? So currently the first one is 19,000. If we do this alternative and only trade in that period, we would actually be worse because we're only doing 73 trades instead of 168. But the profit factor is better. It's 2.2 instead of 1.7. So let's see. I don't always trust these results, and so whenever I do get them, I take a look as to how that actually performs. And we're not yet finished. So we've got a nice little spurt here. So yes, I don't know whether there's something fishy in this or what, but on the whole, we get some good results. But as you can see, it's quite nice. If we didn't, I think we said, let's have a look at the trade analysis. We said that Tuesday and Fridays were no good. So if we go back Tuesdays and Fridays, shouldn't be trading on Sundays anyway. We take those out and maybe we do all hours. What does that tell us? And that tells us if we do hours but exclude those, we actually go a little bit better. We have 19,800 in profit. We only have 104 trades at 168. The profit factor was 2.25. which is better than the 1.69. And the drawdown is even better. It's only 13% instead of 16%. So out of those three, it might be better just not to trade on Tuesdays and Fridays, but to trade every hour of the other day. And it looks to me as if on this result, we're not going to do so well by not trading there. There might be a last-minute flurry, but it certainly is a lot worse. And in the interest of time, let's stop that. And the other thing we can do, if we don't like, so that doesn't appear to be any good, so let's do it on false. But if we don't want to trade on Tuesdays, then we say we don't trade on Tuesdays, true, and we don't want to trade on Fridays, and we set that to true. And so we can now test that, hit start and graph, and see if that does any better. So the analyzer then gives us an extra tool by which we can look at how things are going and what other things that we might test out. So I'm a bit perplexed as to why that went so badly, and that's something then for further investigation. Let's have a look how we're going. This one is looking a lot better. We're up at $4,000 in profit, and we're fairly close to the end of our run. As you can see, that's now backtesting over 18 months. So you can imagine if you're backtesting over 40 months, 3.5 years, all of this takes a lot longer. And especially when you're optimizing and trying different settings, it does take some time. So I'm not saying there's no time involved, but at least you can do this testing at a time that is convenient to you, whether it's on a weekend or after work, whatever. You're not tied to the timing of the trading. You're just finding a period of time when you can do your trading. As you can see, we've finished with 6,000 profits, so nowhere near as good. It's a pretty bumpy equity curve, so I would much prefer the first one we had and trade 24.5. But $7,000 profit factor 1.3, but you can see the drawdown's already up at 26%. And so I would certainly go back now into my expert advisor, and there's no way that I want to not trade on those days. So I'm happy with that. Okay, and that's where we will leave it for today. So I will prepare a handout over the weekend and add that to the email that I'll send to you with the recording, because this time I did hit the recording button. So that's it for today for my second run. It's a bit different. I didn't cover as much as I did in the real run, but hopefully that's explained things to you in a way that you understand it. If you have any queries, please do contact me, and I will be checking as to whether we continue during the summer period for the Northern Hemisphere people, or whether we shall delay a while, but I'll let you know by email as to what we're doing, or whether we'll have a short pause. Until then, I wish you all the best in trading. Thank you for watching, and till next time. It's Andrew Peters signing off.